I'm going to go through the stocks I have bought this week. Hi, this is Mosh and I'm going to go through why I bought Caterpillar and Rolls Royce stock. I'm doing this new thing where I'm going to show you guys a full analysis of the stocks I buy each week. Let me know what you think about these videos in the comments and I'll appreciate a like on the video. As you guys know, I do technical and fundamental analysis when I buy stocks in my investment portfolio. Firstly, from a fundamental side, why did I buy Rolls Royce and Caterpillar stock? They are both in the industrial sector. Now, if we look at the relative performance sector by sector, the 3-month relative performance, they are third from the bottom, so they're not doing so well. 1 month relative performance, they're fourth from the bottom, and a 1 week relative performance, they are fourth from the bottom as well. Sectors in the stock market go in cycles. Portfolio managers do something called rebalancing, where they sell a sector then buy into an underperforming sector while selling the overperforming sector so they can take the profits. For example, when the growth stocks go up, the cyclical stocks go down. When the cyclical stocks go up, the growth stocks go down. Portfolio managers always rotate in and out of sectors and in and out of stocks so they can take the profits, they can manage their risk and various other reasons. I think a rotation is due in the industrial sector. I think a lot of the stocks in the industrial sector are fairly cheap at the moment. Now I'm going to start off with Rolls Royce. They are most known for their cars, but they actually make most of the money in the service sector, especially aerospace and defense. They also have big engineering projects in the UK and abroad. What I'm going to do, I'm going to open up TradingView and show you the full technical analysis that I do and why I bought such a large amount. As you guys know, I like being as transparent and honest as possible to you guys. So as you can see, I bought 5,484 shares, which was worth around 5,400, around that value. My average price was 98.4 pence, so just under a pound. At that price, I thought it was really cheap, so I had to go in and I went in with a large amount. You can already see I'm up 4.33%. So it's already doing well. So it shows that I was right in my analysis. Now, if I pull up the Rolls Royce daily chart, I'm a swing trader and I prefer using the daily chart. So on a longer time frame, I'm not a day trader. All right, so when I open up the graph, I can already see there's some very good support and resistance levels. So I can see around 90 pence, there's a really good support. If I zoom out, you can see there's really good support. It broke through that earlier last year around August time and it done a massive drop. This was due to the earnings. If I click on the earnings, you can see it was down minus 547%. So it's a bit of a shocker. Then they had to start cutting costs. Then around 20th of August, they done a stock split and you can see due to that, there was a nice peak. I can also see, if I zoom in a little bit more, there is some nice resistance around 112, 113, and you can see a couple of times it's broken through that. Now I'm going to put another resistance around here as well, so around 129. Okay, so support, the first resistance is here, second resistance is there. Now what I expect, especially with the recovery of airlines and air travel, I'm expecting Rolls Royce to go and test this resistance level again. I bought around 98 pence. So if I go to around 98 pence, so I bought around here, I expect a profit of 30%. So 30% profit of £5,400 is around £1,620 profit. So that is my expectation. Now it could very well break this resistance and go further, because just before the pandemic it was around 230, 240. I'm pretty certain if I hold this stock for 1 year, it will break the £2 mark, so giving me a profit of around 100%. My target is 30% because I'm quite aggressive, so I do a lot of buying and selling. Remember, none of this is financial information. It's just for entertainment purpose only. I'm just showing you guys my analysis. Next, we're going to talk about a Caterpillar stock. And remember, if you want a free stock worth up to £100 with either Trading 212 or free trade, all you have to do is create an account using my link below, deposit £1 and they'll give you a free share worth up to £100. So that's definitely worth doing. As you guys can see, I bought around 13.2 free shares of Caterpillar. Currently it's worth over £2,000. Now, I've actually in profit, especially due to the foreign exchange rate. That's helped me out a lot. My average price is $216. If we go to the chart and do some chart analysis, you'll see why I went into Caterpillar. On the fundamental analysis side, Caterpillar I think is a really good stock to buy. The reason is they manufacture and sell construction and mining equipment. We know the housing market has gone through the roof. They can't build enough houses and there's a massive demand for houses at the moment due to very low interest rates. Mining is another big venture, especially trying to mine for new materials to make batteries with. Now, if we jump into the chart, you can see my average price was 216, so it's still close to that range. Now, automatically I can see there's some support around here, around 207. The next support line is around $180. The resistance, it got to a peak, an all-time high of $245. My expectation is from the price I bought at around $216, it will go and test that resistance level, and definitely by the end of the year, it will break through that resistance level. As you saw at the start of the video, the industrial sector is not doing so well, so there will definitely be a rotation. Now, if it hits that resistance level, it gives me a profit target of just over 13%. My aim is always trying to get 20% or more. So what I'm going to do, I'm going to keep an eye on it when it does test that resistance level. My expectation is it will break through, and my aim will be to try and get a 20% profit. I don't just use support and resistance. Another thing I like using is the guppy. It basically plots all the long-term moving averages and short-term moving averages. Generally, when the short-term moving averages are converging, so they're coming together, you can see it's slowly starting to climb up. My expectation is all the short-term moving averages should break through the long-term, which is the red line, and we should see a nice upward movement. One thing you want to be aware of is when you're buying stock, a sell-off is always good. It's healthy. It's part of the game. If there was a big fundamental issue with Caterpillar, I would expect it to break through the bottom that it reached around $207 and keep on going down back to $180, but it didn't. You can see it climbed back up and it's almost like it's range bound, and I think it's going to break out of that range to the upside. I hope you guys enjoyed this video. If you like it, comment and I'll do more of these and do weekly updates.